Grand Rising, Grand Rising, Grand Rising. Grand Rising, Grand Rising, Grand Rising.
Grand Rising, Grand
Grand
Rising,
Rising.
Grand
I know. People be out here getting ready for Christmas and this, that, and the third. I know. But we still here, all right? We still here in the morning, all right? It's at a couple hour or so, and we still here putting in the work, all right? So thank you for being here. Thank you for being present. What's going on here? Thank you for being present. Miss it. Let's just do that. All right, so let's get straight into it. All right. Thank you for being here. I know, Christmas is looming and it's presents and it's headache and it's this and it's that and whatever. And you're here in the morning, which is fantastic. Shows me your dedication, shows me that you're on job. All right. And what we're going to do today is Fix It Fridays. And Fix It Fridays is ultimately we want to know what's going on in your trading journey. Okay. And how ask some questions and how we can actually break down the problems that you're having, try and make some suggestions of how you can fix those problems, etc. Okay, so I'm going to ask somebody to recommend or tell me about a pair. What pair are they trading, or what pair do they want us to break down and go through and tell us some of the concerns and issues that you are having. All right, so don't feel any way to unmute yourself and be able to disclose the concerns or the issues you have. I am in a few trades this morning. At the moment, I am in a few positions, so we'll get into those as they pan out. At the moment, they are positive. I'm about $1,200 up. And I've actually got 3 different positions on the gold position, the US 30 position, and GU position. But obviously, we understand it's December. We understand it's a couple of days before Christmas. We understand the markets are slow. But these things don't scare me away from the market. All they do is they make me manage my risk better. And yeah, we'll see how they play out over the duration of this session. Because I believe that they're going to go somewhere and be substantially more than what they currently are. All right. 1, 2, 3 of them, not 2 of them, 2 of the 3 are completely risk-free. One of them's got carrying some risk, but we'll get into that in a minute. But good morning, guys. Let me know what issues you're having. And I'm going to start with anybody who can speak. Just let me know what kind of issues and where we can go into the charts. Want me to show you something? Want me to break down the actual strategy? You got a problem with entries? You got a problem with exits? And we can talk about it. Let's go. Let's go. Anybody? Anybody? Nobody's got any issues. Everyone's cool. I want to start off. If you're not going to start off.
Now, I want to talk about putting your price in and buying. So you're buying or you're selling. So it won't be on TradingView. It'll be on something else when you buy and sell on a broker. How do you execute that?
And if you're executing with your broker, okay.
Yeah, executing your broker and doing partial takes profits.
All right, no problem. Good questions. All right. So first and foremost, we have to understand. We have to understand how this works. Okay, your broker here is the bank. Okay, this is your broker, and to access that broker, we use 2 platforms. Okay. If I'm understanding your question correctly, we use either MT4 or MT5. This is the vehicle that we use to access our broker. Okay. In TradingView, it just stands alone, kind of over here, as a more user-friendly platform that we use to analyze the markets. So simply, if you're trading live funds, You're going to open up a broker account. Oof, yes, yes, yes. Sorry, everything we're going in there. Ooh, I'm free note up whilst we've been speaking. And I'm still not going to move my position because I think it's going to go to the moon. But I am free note up. I'm just managing the position. And I will get into it. Sorry, guys. I just saw it flash up beside me. And I will tell you how I got in, why I got in, etc. etc. All right, so we'll look at it in a minute. So from what your question says is that if you're trading live funds, you deposit your money in this broker here, and then you access that money via MT5 or MT4. All right. I use an MT5. I just like they've got ever so slightly new additional features, like you can collapse all your positions at once, and it's got a little bit ever so slightly better interface in regards to some of the tools, etc. But a lot of people turn around and say, oh, I don't like MT4 and it's this and that and the third because it's it looks a bit old school and stuff like that. Well, I suppose so. Yeah, but all you're doing is executing on the trades, So I'm happy with it. So I don't know if that answered your question. I don't know if that was what the confusion is. So your broker this is where you deposit your live funds. And even when you deposit your live funds here, you will then download MT4, MT5. Okay. My suggestion or what I use at the moment is MT5. Okay. And you'll also download it on your mobile phone. Now, the reason why I personally believe you must have it on your mobile phone is to manage your trades. Okay, you have to have a way in which you're going to be managing your trades. So say for argument's sake, you have to leave the house. It's nice to be able to, you look down at your phone and you're up 100 grand. Well, if you wouldn't be able to, you wouldn't know that if you wasn't able to have it on your phone. So that's what I'm asking. Was that your question there? Was that your question?
Yeah, you kind of answered it, but I'm all about do you know when you go in there and you've got the price up there, how much you want to spend, and it says how much movements you've got, and your stop, and your profit, your take profit, and your SL. So I just might
explain that again to me. When you say how much movement and how much, I'm not exactly following you. Where are you seeing that in your MT5, in your broker,
in your MT5? So in your MT5, you go there. You've gone into TradingView already. You've seen where you want to put it, where you want to put your stop loss, when you want to put your take profit, and you want to go into your MT5 and execute it on there.
So you're saying, how do you replicate that? Is that what you're asking?
Yeah.
Okay. I think I know what how you're asking, you're saying, and I'm going to try and answer it. The first thing I say to you is this: TradingView is TradingView. TradingView, you have to understand as well, with TradingView, watch this. If I put in here, let me use a new one. Oh, currently 3-6 up. I'm just.
What are you in, Jay?
I'm in US 30 for the buy.
Yeah.
I'm in gold for the buy. I'm in GU for the buy. And I've got different targets for them. And
all similar.
All very similar. And let me explain to you why I do that. I'm going to explain to you why I do it as soon as I answer the question. I'm going to explain the reason, because there is a school of thought that obviously you don't necessarily want to trade similar pairs. But what I have found, I will come back to your question in a second, is that I can use one to inform the other. All right. So essentially, I'm able to trade, and sometimes one moves before the other one. And sometimes the general consensus, if I can see them all looking the same, all aligning, then I'm kind of rolling with that. And it's rarely I'm going to be wrong. You heard me you've been hearing me recently every single morning, starting the session saying to you, I'm 1,200 up. I'm 1,400 up. Yeah. It's something I've seen in the morning, and I am testing it to see how extensive it is. 3-8 up now, 3-9 up. Okay. And see, and I'm going to show you that in a minute. But anyway, getting back to the question there, is that, in fact, you know what I'm going to do so that I'm not looking over my shoulder? Let me secure some ones before I get egg on my face, right? We don't want egg on my face, so I'm going to do this.
Yeah, I'd like to know the times you get in after you have this. You sort out the question. I'd like to know what times
100%.
you get in.
I'm gonna give you some source that I've noticed, especially for yourself there, Al. I'm gonna give you some source that I've noticed. Four grand up. And I want you, we will back test it on the session. We'll go back on the session and we'll go through it, okay? I'm just gonna squeeze this up because should I squeeze it up or should I just leave it? I believe this is gonna go to the moon. But it's gonna make a big retracement. Do I want to sit in the retracement? I don't want to sit in the retracement. Sorry guys, I'm just managing my trade, okay? I'll get back. I'll tell you what I'll do. I'll squeeze everything up. If I get stopped out, I get stopped out, and then we'll get in again as a family. If people are in front of the computers, we'll be able to get in. Even if you're going to take it with 10 pence or a dollar or a very small lot size, then that's fine. We'll be able to get in together. So we'll do that. It is going to probably stop me up. So I'm squeezing up quite tight. If it doesn't stop me up, the universe just wants to give me more money, which is, I don't want to argue with the universe. All right, so cool. So listen, TradingView is TradingView. And what I mean by that is if I was to type in here, TradingView, let me use this one, GBP USD. Look at all of these GBP USDs. They're all from different brokers, FXCM, Oanda, Forex.com. They're all from completely different brokers. And those different brokers, just like, you know, a bank, get different rates from, you know, from with their liquidity provider. Okay, so sometimes you're going to see over here a price saying 1.2707023. In fact, let's even display it here. I'm going to split my screen like this, and over here we've got GBP USD from Oanda. Okay, and over on this side we're going to get GBP USD from I don't know, Kraken. Okay, ugly looking chart, but look. I want you to draw your eyes to this number here, the number that's got where it says GBP USD. On this one, it says 1.27031. On this one, it says 1.26963. Why are they different? They should be the same, but they're not the same because these are different brokers and they get different prices. Do you understand what I'm saying? Within reason, obviously, we're not expecting for this one to be 127 and this one to be 197, all right? But this is still quite a discrepancy, especially if you're trying to look at your number here in your TradingView and plug that into your broker, because your broker's numbers could be completely different. All right. And that's going to make a mistake if you've got quite tight stop losses or whatever it may be. So what I say is this, two things. It's either you have the exact same broker, like Oanda is your actual broker that you put your actual live funds in, and that's different because you've got a synergy there, you're aligned. Or what I do is this, I always typically use just one broker on TradingView, which is normally Oanda. But there are some pairs and normally some indices, although the universe wants to give me more money, didn't stop me out. Let's go, all right? There is some indices and some pairs that Oanda might not cover. You might have to go to somewhere else. So if you're looking at crypto, you're looking at certain things, there's certain other ones that you might not cover 4-1, all right? Just moving up, I'm letting 1 minute structure be how I trail my stop. That's why you can hear that sound in the background, and you guys know how I do that, but we'll get into that in a minute, all right? So what I use Oanda across the board for all of my TradingView analysis because their candles normally look decent. Look, at least these candles are joining up. That Kraken one was a hot mess, all right? And on that basis, I then open my MT5 alongside my TradingView and I look for the areas of interest. So say for argument's sake here, have a look. Say for argument's sake, I'm looking at this and I'm saying, look, this is a 5-minute time frame. There's some imbalance in here and I want to get in when this market comes and closes this imbalance, all right? Just imagine that that's what I've got stopped at one position, which is GU. With this one here I'm talking about, okay? Now, for argument's sake, I go and put this imbalance in on my MT5. As well as this as well, you will find that your MT5 will move before this. Because you have to understand, your MT5 is coming straight from your desktop software that's been downloaded, straight from, obviously, the terminal. You'll find ever so slightly, your MT5 will move first. think about it, this is having to go through the broker, and it's having to go through blah, 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 having to go through, sorry, I'm not saying broker, this website, and blah, 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 blah. And sometimes, especially when there's news, Al, yeah, this trading view will just freeze up. Especially when there's news happening, you would see like this candle just not moving for few seconds. And then all of a sudden it jumps to where it's supposed to be. Yeah. And so therefore, this is not necessarily the most reliable chart. Now, I'm just talking about on a smaller time frames. You're not going to necessarily notice that on a much bigger time frame if you're looking at things on a 15-minute time frame. But for me, this is just a great interface that we can use. We've got nice little tools and lines and zigzags, and it's, you know, it's the most usable thing that we can use. But if I was like right now when I'm trading, I've also got my MT5 open. And I'm also, if I see a zone, I need to find in my zone. Because sometimes, and I've showed you this many times, from what my MT5 looks like to what this O1 might show me, this might have 4 candles in this little cluster. My MT5's only got 3. Or my MT5's got a slightly different pattern. Now, personally, I've got to work off of the basis of where my money's at. My money's with the broker. Do you understand what I'm saying? Because so if the broker's trying to come down and it's trying to close, that imbalance here is referenced in the broker a little bit lower down. I've got to take that as the level. So that's why my money's not at TradingView. This is just like an interface that I'm just using because I like the look of it. All right. So that's what I would advise for you to do there, Darren. I'd advise you to get into the habit of having your MT5 open. The only way you're able to do it on a, you know, without having your desktop open and certain things is if you're taking like quite larger zones. Because you shouldn't have that much of a it shouldn't be a huge discrepancy. But in my opinion, this is how I trade, and I can only tell you about, you know, my journey is to have your broker, your MT5, sorry, open, and then you can use TradingView. So say for argument's sake, this GU, I'm going to delete everything off this chart. Ultimately, you know, I might be doing my analysis on this chart. So, you know, okay, I'm analyzing these things because it's easy to do. It's nice and slick and it moves nicely. But then when I'm like, okay, I know what I want to do. I want to actually get in for a buy, you know, in and around this zone here. But whoops. I want to get in for a buy in and around this zone here. And I'm saying, yeah, it's approximately, you know, 15. Then I need to go and find that on my MT5. Should be quite easy. I'm going to go to the same time frame. I'm going to go and find it. I'm going to say that's where my entry is. And I'm going to place my alerts. A lot of the time, the alert you hear is not a TradingView alert. It's an MT5 alert. That's why you hear ding, that little sound. You want to hear it. You're going to hear it in a minute. Something's coming down to, looks like it wants to stop me out again. All right. Let's put a little alert in so you can hear it. That's a MetaTrader 5 alert. Okay, that's not coming from this TradingView. Because like I said to you, that's where my money is. My money's in TradingView. So ultimately, you know, that's really why I want to be receiving all the, you know, the core information. All right. So that's the answer, bro. Open your MT5 and open TradingView. And when you see what you want to do, understand what you want to do, then you're going to execute. Therefore, you turn your focus to your MT5 and that becomes your weapon of choice. Do you understand what I'm saying? Yeah. That's how you're going to work. And in regards to your phone, I heard a lot of people tell me they say they just trade off of their phones. I don't know how people just do that. No, I'm not going to say that. You can do that. You can just trade off your phone. But
Jay, sorry to interrupt you. I sometimes take executions off my phone, but I'm sitting at, but I'm at my laptop. Yeah, I've got my screen. Sometimes I think it's quicker, especially if you're on the Wi-Fi.
It can be quicker.
Yeah, it can be quicker. Yeah.
And to be fair, executing on your phone is I tell you what the benefit of MT5 on your phone. On MT5 on your phone, you can actually just tap your entry and you can drag your stop loss. On MT4, you cannot on your phone. This is why I like MT5. MT5, there's always an issue because that you have to manually, on MT4, you have to manually put in your stop loss. But on MT5, when you take it, like I use one-click trading. Now, one-click trading allows me to get into a position with one click. So, you know, I don't know if you're at that point yet. But if you are at that point, I would advise you to activate your one-click trading. Okay. So let me show you here my MT5. All right. Let's go over here and turn around and say, look, can you see over here? You go to tools, you go to options, and in here you go to trade, and you click this. When you click this, this will give you a disclaimer. This disclaimer is basically saying, bruv, I hope you know that if the cat accidentally runs across the keyboard and clicks buy, yeah, you are going to be in the trade.
Yeah.
Yeah, it's saying to you with one click, this is this interface here. If I click this, I'm in for 25 lots. Yeah. Whereas if this is not on, the way in which I have to put on my trades is I have to, you know, create a new order. Hopefully you guys can see this. Can you see this new order pop-up window? I'm not too sure how. And then I've got to go in here and I've got to put where my stop loss is, decide whether it's market execution or whether it's a pending order, whether it's a buy limit or sell limit. And there is some other options here. GTC stands for good till close. You know what I'm saying? Or you can have a position that stays on for the whole day or whatever it may be. Okay. Like ultimately, this is the way in which I was taught how to enter my trades using this interface, making sure your stop loss is in, your lot size is in. But when you get into a point where you want to take action in a trade, one-click trading, which is ultimately, like I said, you go to your tools, you go to options, you put one-click trading on, click OK. Now, once my lot size is in here, if I go in here 100 lots, if I hit buy, I'm in for 100 lots, but the stop loss is not in. So what I do is once I get in, I then click that position. I'm going to I'll show you here. All right, I'll show you on US Tech. I'll take the L for the team. All right. I'm not going to wish it as an L. It's not going to be an L. It's going to be a win. All right. But there's obviously no analysis in this whatsoever. And I'm definitely not hitting for 100 lots. Okay. Let's see if I can go and even do it like that. Oops. This is my live account. All right. So if I was to go that, I'm in, but there's no stop loss in. So what I do is I go over my entry position, drag this down. So now you can see on the left-hand side, it's showing a number. You see it?
Yeah, I see it.
It's showing me -7, -8, minus thing. So here, right here, boom. That it means my stop loss. If I lose this trade, I'm going to take an L for $10. And if I wanted to, watch this, I can click my entry and drag upwards. And can you see that letter, what it says on there? What does it say? TP.
Take profit.
So I could, if I wanted to, just drag and drop. There's my TP, there's my stop loss, everything's in. If I wanted to get rid of that, I can right-click that TP. Oops, I can right-click that TP. Cancel, take profit's gone. I can right-click this stop loss, cancel, take profit's gone. Yeah, I could so that's how I trade. I trade using one click and then I drag and place my stop loss. And for the fact that it shows you what it is monetary amount, if I'm only willing to risk £10, it's quite a nice way of seeing that $10. All right. Now, prior to doing that, I don't just enter the trade and then hope for the best. Prior to doing that, I have used my Cashback Forex, which is the calculator of choice that I use. And if I was getting into the NAS, for argument's sake, when I was analyzing it, I would use this calculator. I will click this stop loss in pips. I would also put in my, I think they've got some funny way of doing this, the contract size. Okay. And then I know that if it's, you know, a 50 pips or that this is my lot size. Now you've got to check that what your contract size is with your broker. So I'd advise to you the very first time you take any trade to take this as small as possible. If this says 10, put 1 in and then pull your stop loss in, and you're going to see your stop loss is 1/10 of the size that you wanted it. So you know, no, actually it's not 0.1, it's 1. And then you will now know the metric for what you're trading with that broker. Because I've been on certain brokers and, you know, risking $500 is 10, and I've been with another broker and risking $500 is 100, just because of the way in which, however way they've set up their their metric for that particular pin. It's just individual to the broker. Yeah, generally, you know, it will be the same kind of thing, but sometimes there are some mad brokers whereby, for whatever reason, like I was with a broker, and when I go into any type of Japanese JPN 225 trade, it's like 10,000 lots or something like that to put in to be at the way I'm supposed to be at. It's 1,000. Like it looks like this is mad. Either way, the way in which you do that is the very first time you just test it. Very first time you ever open a new broker, you just put one. You don't jump in 2 feet and go nuts and just say, yeah, you thought it was 100 lots. No, because that could blow your account straight away. All right. So you're going with one toe. But either way, like when I'm analyzing, I've got this out. I've seen that the zone, for argument's sake, the zone here is 50 pips. I want to know what 50 pips is in lot size for NAS. I go and I put the NAS in here or whatever my pair I'm trading. I put in 50 pips. I put calculate. I go, oh, okay, 50 pips is this number. So then when I'm in my MT5, I know that 50 pips is 50 lots. All right. And have a look. Look, I'm making money right now. I'm in the blue. Right. But let me close that. Yeah, I'll close that. All right. So I'm saying to you in regards to that's how you should be set up, I think, when you're trading on desktop. You have your calculator up. There are other indicators you can have and you can use on MT5, but I just don't use them, so I can't recommend them. I always have this up. I've got the benefit, I've got a few screens. All right. I've got the benefit of I've got a few screens. Okay. So therefore I have, I can have my calculator on one screen. You can always do this if you've got a phone and you've got your desktop, or you've got an iPad and you've got your desktop. You can always do it like that. You don't have to start saying, oh shit, I need 20 screens in my room. You don't. You understand what I'm saying? Yeah. So, but I'm saying to you, your calculator, the way I trade, because I'm market execution and I get quite tight entries, is I want to be able to get in the trades quite quickly. All right. I don't want to close out for 10 pence. All right. Fantastic. I just made 10p from that or 10 cents. So I'm saying to you, the one-click trading just works for me. All right. And like I said, what's great about it, and guys, when you use your MT5 on your phone, try it next time. Do one-click trading, which you have to activate again in your options. So it might already be activated as default. I'm not sure. And then once you click into a trade, you can quickly just tap the screen and you'll see a little kind of panel come up saying SL, TP, or whatever it may be. You press SL so it knows what you want to do, and it will put a line somewhere. Yeah, when you tap the SL on your MetaTrader 5, let's go and pretend that we're doing it here. Let's just pretend. Let me come out of that. I'm trying to get me to Bing stuff. Who's Binging stuff? I don't know who changes it every so often. I don't know if it's an update. Microsoft seems to be trying to push me back to using Bing. No one cares about Bing.
No,
forget about it. Let's go here. I'm just trying to find an image of what we're talking about. So for argument's sake, here's our platform. And when you just click a one-click trading entry, you will see your entry come up on the screen as a line like this. Your entry comes in like that. I think it is actually even a red line. Okay. And I still got a position, guys. My gold's still in there at the moment at 1,500, but I'm going to squeeze it up because it's making a bit of a retracement and I don't want to give away. There you go. All right. So, and at that point in time, you've got no stop loss in. But if you tap that line, all of a sudden you'll see like another little line, or another little, maybe actually on this line, you'll see some options. And the options will say SL, TP, close or something like that. You tap the SL for your stop loss, and then you will have the ability with your finger, and I think it's an orange line, you'll have the ability to, with your finger, to drag, oh my days, what have I done? To drag that stop loss to where you want it to be. And you'll also see, when you're dragging it, you'll see the money, ticking up on the sides of the screen. And then when you let go of it, you have to press the little arrow and then modify it to actually secure that stop loss in at that time. So you can try it
while you're in a trade as well, yeah? So you can do that during the trade or not.
You can do it during the trade. Yeah, you can do it during the trade. You can move and modify your stop loss just like that during the trade. So that's, for me, that's a lot better than MT4 on the mobile. So MT5 allows this little feature to be able to drag your stop and your TP and just keep it moving like that. So say, for example, I take a trade and I have to leave the house. I might want to say, because I'm not managing this trade well and I'm not too, it's not a 10 out of 10 trade or whatever it may be. I might want to quickly, as soon as it gets to be in profit, drag my stop and make it risk-free. So I can do that quite easily on my phone by just dragging this line, letting go of it, then clicking the little arrow, which is ultimately like an enter. Yeah.
Mhm.
And then it will go modify, and I can modify my position and everything's going good. I've modified my position. Ooh, US 30. I'm so happy. Look at how I managed my trade. Managed it perfectly because US 30 is done. Have a look at this real quick. Sorry, guys. I did say I was going to show you those markets. Let's have a quick look at it. Look at how well I managed to trade. I'm happy about that because is this US 30? It is US 30. Let's go and do this. So I got out this trade here. And since we've been talking for the last how many minutes, we've completely jumped out the window. I'd be pissed if I was up that amount and then we jumped out the window and we're down all the way down here. Okay. Now, what I'm going to say to yourself, it is Christmas, it is December, it is not the best one. I do not know why the hell this has just jumped out the window like this. There isn't any news that's just happened. And there's a level of volatility, all right? However, my overall bias of why I thought it was pushing up here, let me go and see. We'll break it down. Let's break down the actual charts now and actually break down and understand why I was in those pips, okay? So I could start again. Yeah, we could start again and we can wipe the whole charts, all right? But yeah, I hope I answered your question there, bro, all right? And you can start putting those things in place. Like I said to you, there is documentation of your whole setup, etc., etc., etc. Okay, that will allow you to do certain things and have it in black and white. And we'll get to that. You will speak about those things.
Okay, cool. Thank you.
No problem. But in regards to the trades that I was in, I'm just trying to remember what I was in. I was in gold, GBP USD, and US 30. All right, so let's start with gold. So the market I have seen, between 6 and 7 o'clock activates. Okay, just 6 or 7 o'clock in the morning. Obviously, we know London open is at 8. But prior to that, I've seen this market just activate around these times quite early. So before even Breakfast Club starts. All right. It's been messing with me going to the gym. It's like I don't even want to go to the gym because I'm like I'm missing some energy. Like I'm missing certain things happening. All right. Now, just squeezing up my gold trade, which I'm still happen to be in. For some reason, they want to stop me out, and it's still in there at the moment. It's at 1560. So we'll see what happens. All right. So where was I? So on a smaller time frame, I'll tell you what, I'm not going to break down every single one of them. Let's break down. I'm going to break down every single one of them. Why not? All right. Let me get for the time. I'm going to break down the easiest one first. And then we'll spill over. Let's pull up the other one. I want gold to go. Gold looks like he wants to keep going. Go. Stop marking about. All right. Just GBP USD. Let's have a look. Now, I'm on a very small time frame. And what I'm doing is I'm trading all of the imbalances. Okay. Especially in the morning, I have seen that, that around the times, the market really, really respects the imbalances and plays, right into imbalances that you've identified. Like a 1 minute imbalance, it will go like that. And sometimes what I found, how I trade, is that, you see, just because we decide that we want to look at the 1 minute time frame or the 5 minute time frame, it doesn't mean that we can see everything that's happening because on the 30-second time frame, there may be imbalances. Now, on a normal day, the market is going and moving and closing those imbalances, but you're just not aware of it because you're only looking at it from a 1 minute time frame perspective. Yeah, gold's going again, 1800. Let's go break this alert. If you hear my alert ring, it means it's doing something. All right, you put a little alert in there. I'm just pissed. I'm not pissed because everyone's made a huge retracement. All right, so let's have a look here. This was GBP USD. We know this. This is not new. This is a play. This is one of our plays. This isn't something that we haven't seen before. This is one of our plays. What's the market doing here? What is it doing? What is it doing? What is it doing? What is it doing?
Consolidating.
Consolidating. You know? And this is our indication of what the market wants to do. Okay. And this is a correction in here. Now I'm quite small in here. And when I see sometimes in the morning, actually, maybe you can see on the 1 minute time frame. You can. All right. I'm looking for that first imbalance. Yeah, boy, keep going. 1800. All right. I'm looking for that first imbalance, and that is my entry. Can anybody see the imbalance? Here we go. If you are in front of your screen, can any of you guys identify the imbalance? Can any of you identify the imbalance? And you can draw on my screen if you want. There's a tool where you can draw on my screen. Can anybody identify the imbalance? Tell me. Someone can. If you can, just draw on my screen and show me the imbalance that I'm talking about.
Hey.
Show me the imbalance that I am talking about. The imbalance I'm talking about is anyone? If you're in front, is there anybody in front of the screen? Otherwise, we're just gonna be waiting for nobody. If there is somebody who's drawing it, tell me.
I can see it, but I can't draw it. But it's where you said the indication was. Where you see.
So look, have a look at this. That's what I'm looking at. Look at the time. 7 o'clock, boom. This move broke outside the consolidation and left this imbalance. So when I see that market come back into here, into that level and close that imbalance, which on my MT5 was really looking like it's here. Yeah. Then I'm looking for a reason to get in, an excuse to get in. All right. And that excuse to get in might have been on a small time frame. Okay. As soon as I saw a break of structure, retracement, or close back above, I'm in the trade with my stop below the low or below that imbalance level. Okay. I think that was my entry on GU. Okay. All right. I think that was my entry on GU. Look, have a look. We tapped into that level in here. And was that my entry? Maybe it might have been the first tap into it. Broke structure. In fact, maybe it was because I remember it was dancing around for too long. And I actually thought maybe I was going to get stopped out. Maybe my entry was something like this. I don't know until I look at the actual price, all right? Which is going to be different anyway to Awanda, so it's not going to help. But my stop would have been below that imbalance, yeah? If you wanted to take that trade and you was going to be safer, your stop would have been below this swing low. But I didn't want to do that, okay? So my stop was below the imbalance. And as you can see, I was all right, okay? Yeah, I was all right. So remember my risk at the moment is I risk kind of, I'm at like $500, which for me is quite small. It's a 200K account. And yeah, and I actually got out this trade near the top here before things jumped out the window. Or somewhere anyway. Now and it was similar with the rest of these trades also. It was similar with the rest of them that, you know, I already had a buy. I've been watching these trades since yesterday. Look, and I wanted to get back in over here. Now, because I actually take trades on time frames that I don't tell you guys to learn how to take trades. Like I will be looking at this on a 30-second time frame. Because this move was so quick, I need to see structure. You understand? I can see the structure here, even though we're on a 1 minute time frame. I can see here we broke the structure, here we made a small retracement, and here we closed back above in here. If I go to my 30-second time frame, you see, I can get more information. Now, as these things form, what I do is this. I'll tell you exactly how I trade this kind of scalping. No, it's not scalping, but this kind of very small structure. Is as this go, I will do this. Look, on my MT5, yeah, as well as on the MT4, I will identify that this market could do this to close that imbalance. Even though it's on a 30-second time frame, it's still there on a minute. And in the minute, you might just see the candle move like this and that, and you might see it wick down here and not know why it's wicking down. This is different because you can see it here also, but you might not know why it's wicking down there. But for me, I will drop my time frame down to see everything. And you'll be surprised how many times that market just comes down and just might just wick into that imbalance, maybe even into just that little gap right in here. It keeps me calm now. That keeps me calm when I've got this trade on and my stop is, below this low, and I start seeing it coming in this direction. I stay calm because I kind of know why it's coming in this direction. And more times out of 10, when you see that there's no more imbalances below, that's when the market will just pop. It will just pop and start kind of going. All right. And as I was saying to you there, it's like you can kind of use one pair to inform the other. What do I mean by that? I mean that ultimately they do move differently, but very similar. The same, but with different nuances. Yeah. And, what is the issues with that? Well, the issues with that is that if you're wrong, then you may be wrong on, if you trade pairs that are very, very similar, which they're not very, very similar. If you're wrong, you may be wrong on all of them. You've got all eggs in one basket, as they say. You're not necessarily hedging the position. You've got all your, all problems happening at once. Yeah. But yeah, I've kind of, perfected a way of being able to, allow one to inform the other, if you know what I mean. So say, for example, right now, I'll be looking at this saying to myself that even though this GU is taking a big retracement, I still think it wants to be bullish. That's my overall analysis. I've seen it break structure here outside of the consolidation, retrace. I've seen it close back above over here. The fact that it's taking this retracement, I'm just looking at is where is it retracing to? So I would do this. Have a look. Can you see this little imbalance in here? I will identify it. Boom. There's no other imbalances down here on this time frame, but I would also be flicking through the time frames. 2 minute, 3 minute, 4 minute. I can't see any other. Well, there is 4 minute imbalance. Could decide to push down to here in this 4 minute imbalance. I don't know. Why should it just go to a 1 minute imbalance? I don't fucking know. Mama French. Yeah. So obviously I'm looking at it because if I get into this trade, I'm not going to press my stop before where this imbalance is. When I start seeing there's no imbalances there, cool. So maybe if I was to get into this trade, I'd be saying, look, right, which I actually do feel like I want to push the button again, but we'll see when I see if I see a break of structure. I'd be going and turning around and saying, look, I'm going to, if I see a little break of structure here, even if it's on a small time frame, because this market's moving so quickly, I might not be able to see that break of structure on a 5 or 15, 20 minute time frame. Yeah, or hour time frame. So I might be, okay, cool. If I can see this market starts breaking structure on I may do. I'm not saying this is how I always trade. This is why I trade in the morning when there's a certain opportunities and I'm happy what I give. I manage my risk. If I see right now this starts to break structure after tapping into this area, retracing, closing back above, from there I might enter, but on the basis that I'm taking it into consideration if that market decides it wants to close the imbalances that I've identified. Okay, I always need an excuse to get in. I want to see a break in structure. And because sometimes they're moving so quickly with some quick action, like for example, this GU, look at this quick action, boom, flew down here. I'm at least thinking to myself that even if this market now wants to start going down, because it has broken this structure, it kind of wants to come back in here, possibly, to close this imbalance first. So I'm looking at it like I could potentially, watch it now. See how he's pushing in there? I wouldn't be concerned about this because I've identified, especially if it doesn't get out of that imbalance quite quickly. I'm thinking to myself, it's mucking about. It might want to come and do something else. So say for argument's sake, we go and we dip into here and I see a very small, I'm talking about maybe on the seconds, breaker structure. I'm like, I'm watching this market time and time and time again, just go and closing balances, closing balances, closing balances. So even if I was to get in here and I start seeing a breaker structure to the upside, I'm thinking to myself, we're going to go and close this imbalance. Even if we want to go down, even if we actually don't want to go and break this high. But what I would do on that type of strategy, because that is a certain play, that isn't me going and taking a 10 out of 10 trade and letting it run for the day based upon certain things. I'm taking lots of things into consideration. Where it's December, traders are not there, a couple of days before Christmas, market is volatile, there's news later at 1:30, blah, blah, blah. So what I would do is as soon as this market has closed all imbalances that I can see and move past my entry, I make this trade risk-free. I don't ramp with it. If there's an imbalance and I can see it could possibly come down to close the imbalance before going back up, I won't make it risk-free because I'm just stopping myself out for no reason. But if I've seen it's closed all imbalances on the time frames that are relevant, yeah, because obviously it's like in this instance, maybe we're only going to be relevant up to probably about 5 minutes. Yeah. And I've seen it's closed all of those imbalances. Then once it's going past there, I'm in profits, I'll make that trade risk-free. So worst case scenario, it stops me out for nothing. Best case scenario, I just start getting a little push. When you're trading that, decent lot size, that little push is going to give you, $200, $400. Wait, at that point in time, I take my money. I'll trail structure and I'll take my money. Now, like I said to you, I believe if we go back to, say, for example, gold, have a look at gold. Ooh, and I'm still in. I just look back at my MT5, 2-3. Look at the market structure and price action that I teach every single morning. I've drawn this range that this market's been trading up within. We was down here. Look at the time. Today's Friday, 6:55. At 7 o'clock. It's Breakfast Club. I'm on my charts before the Breakfast Club opens up. What area is this, guys? Based upon the little drawings that I've done on my screen, what am I really interested in doing from this area?
That's buy territory.
It's buy territory, yo. Oh, why isn't this working? There you go. This is buy territory for me. And there's gold. And there's huge imbalances above. There was imbalance in here that we've took that imbalance, which I was like, are we going to take that imbalance? We did take the imbalance. But have a look on the bigger picture because I'm only in a 5-minute time frame. Remember, I'm very small. Look at this. Watch this. When we clear this high, when I'm speaking into existence, look at these huge imbalances in here. You've seen I've drawn them. I've marked them out with these orange blocks. Let me get rid of everything. There's huge reasons why this market may want to come into these levels, these areas. Look at the angle of my trend at the moment. The angle of my trend at the moment, if I just believe that it's going to keep trading within that trend, should be taking us up into these areas here. Just on a connect the dots kind of level, the market's in here, look, pinging and ponging in this range, just based upon my little drawings of, the angle of this trend. I want to see it going into here. If this gold continues to go into here, it's a 10 grand trade, at least, on that one position that I've got in at the moment. That I've got in, my entry was from down here. So in line with what's been going on, I'm looking at this market saying we are on a smaller time. Obviously, I don't know whether we're going to clear this structure. I don't know. I didn't know when I got into the trade. Let me zoom in. Even though it's still, a buy area for me, etc., 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 I didn't know if when we was down here, we was going to start clearing this fraff, all these little fraff in here. Because the market was kind of hokey-cokey in before that. But like I said to you, at that time frame at 7 o'clock, I've seen that the market activates. Because look at that time right there. See right where my line is right now? That's 7 o'clock. And right then is when we broke out of this little, have a look. I'm going to drop it down so you can see it. I'm going to go to my 5-minute. I think we can see it from a 5-minute, it's enough. I'm going to put a vertical line. 7 o'clock was here. This market prior to that was just dancing around here. Dancing. And at this point in here, when I saw the market breaking structure above this level here. Because remember, on a smaller time frame, watch this on the 1 minute, it looks even clearer. Some consolidation happening. Look, this market is, that boat is turning around me. As soon as I see it breaking out, that's enough confirmations for me. We're on an area that I'm interested in buying it anyway. There's huge imbalances above, and I'm seeing it breaking structure to the upside. Now, once I get into that trade now, once my risk is managed, I've got to stay in that trade and, you know, and bite the bullet and just be like, okay, I'm in that trade now because I'm just going to move this up right now because we're currently at 2004. I thought I was going to get stopped at 1300 and still going to the moon. Yeah, I actually don't want to move this up because I think it's actually going to go to space. I just don't want to sit in a big retracement because I'll just feel dumb if I sit in that market. Look at the GU. After I moved up my stop, it just jumped out the window. Now it has recovered probably 80%, but it may have gone down and stopped me out for all I know. All right. So I'm just saying to you, like this from a just from a market structure perspective, I'm looking at this and I'm thinking to myself, that this market here, even if it wants to go down, this is the daily. If I go to my 4 hour or my 1 hour, probably it'd be better. Look, this there, you can even see, even if it wants to go down, there's huge inefficiencies in this market above that this market might want to go and close. Plus, it's gold. Plus, we know that ultimately gold's been bullish. There's loads of reasons for gold. Yes, we knew that it made this big retracement, but it made this big retracement here because it grabbed liquidity. It's a thief. It grabbed the liquidity here, ran in the opposite direction, put your money in his pocket, threw the wallets away, and then he got back to business, bro. This market wants to go up. The world's on fire. The world is on fire, and people are like, yeah, it's Christmas time. Let's just put my money in some gold, mate. It's the safest place for my money over the Christmas period. Gold. That's what I'm thinking about. That's what I'm thinking about the markets. Yeah, as well as market structure and price action on a smaller time frame. Look at it even on a bigger time. This is the daily candles, the daily range. Look, I've got those lines in so you can see where my mind's at. That's where my mind's at. This market is trading within these ranges. And here we had the three kings. We had the three kings. One king, two king, three kings. We grabbed liquidity. We ran in the opposite direction. And when we ran in the opposite direction, the market, where did it go to? Watch this. This is the telltale sign for me. The market ran into the opposite direction. Ran in the opposite direction, even all the way down to here. And then boom, it got down to here and someone slapped it in the mouth and said, what are we doing? What are we going backwards for? We're gold. Stop ramping. And the gold is, they said, yeah, we are gold. Started pushing up here. And then when it started to make this, they're giving me the data points so I can actually draw a trend line in. The market was sitting right on that trend line. And I'm just like, you're sitting on the trend line, you know, over here. You're respecting that trend line. You're moving up. Then therefore that trajectory is we're respecting bullish trajectory. So here, when I start going and I'm seeing that the trajectory here, data point, then I pull out a parallel line and see that that parallel line is touching data point. That gives me a confirmation that the angle is correct. If I pull out a parallel line and it's from the bottom and it's exactly touching data points from the top, I'm happy with that. It's like somehow something's matched up. It's like I've got the right key in the right door. Sometimes you do it and it doesn't quite match up and you're like, yeah. And you put it on the highest point and you could still be correct, but you put it on the highest point on the basis, yeah, it's just stopped me out, guys, for like 2,000 something. All right, cool. So I'm out of all my positions now. All right. But I want to get back into this goal because I think it's going to go to space. All right. So I'm saying that, yeah. So I'm looking at that. I'm saying, okay, cool, fine. So we're right over here, and the market's dilly-dallying, and then it starts to consolidate, and then it breaks to structure above. As from the time you manage your risk, at some point you've got to pull the trigger. My risk is managed. If I'm wrong, I get in here, and the market breaks outside of this consolidation. And you know what? Another little trick I do, guys. I'm going to show you another little flex. I'm giving you all the source. It's on my MT5. I put it on a screen. I've got long screens that are portrait, okay? And it allows me, and you can do it here anyway, to stretch these candles up to be able to get a better view of things. So as soon as this market was, and to be fair, I actually think that this wasn't the consolidation how I identified it. I think I identified it like this. Now I look, okay. When that market came into that level, I think I did, yeah, look at the time. See, if I lie, I die. I'm not lying to you guys. I'm telling you this thing. This is the time. Look, 6:59, 7 o'clock this morning. I identified that the market was kind of in here. So when I saw that market break structure, retrace, and close back above, and it might have been on an even smaller time frame, but let's just say for argument's sake, that was it. That's my entry. My stop was below the 50% level of the consolidation. Because in my opinion, if market comes back past the 50% level of any area I thought was slack consolidation, it wants to go in the opposite direction. It's very rare you see markets break outside of consolidation. I like this. All right. This is the consolidation area. It's very rare you see it will break out. And if it wants to continue going up, you see it go past 50% of the area. And let me draw it for you so you can see what I'm talking about. If this is the consolidation, it's very rare that this retracement here goes past 50% of the consolidation. If it does, I'm concerned. If it does, it might be doing this. Or if it came all the way down here, for argument's sake, it might do this. And then decide that it wants to go this direction. So when I see that the market came, my stop doesn't have to be all the way down there. Because my stop's like, if it's going down there, I don't actually think it's going bullish. So my stop was below this level here. And that is, essentially kind of on slightly just below the 50% level of this consolidation. And the market came down, it came close, like it had a little hairy moment. And then we went to the moon. And I've just been stopped out about a minute ago up here. So, that's looking like, at least based upon how, gold does these moves, 400 pips or 40, 45, 46, it depends how you're looking at it. All right. Just saying that's 400 pips. It's a big move. And then you do the math. What did I, do you do the math on what I said to you? I've got my lot sizes in. Yeah. And like I said to you, I actually believe that this market is going to keep pushing. Yeah. So therefore, look, what would I be doing? Trying to draw some angles in here first and foremost, based upon the data points it's given to me. Okay, like so. I'm on a 1 minute time frame even here, which I'm saying you should need to be on a 1 minute time frame. That's not what I'm saying. I'm saying to you, either way, I just need data. Look, on a larger range, I'm saying that's the range. So for all I know now, market might do this. Look, it might do this. So I don't really care if I'm out of the thing, because based upon those angles I've just put on there, we might be, looking for, it might be a little retracement that happens now. So what will I do? I'll place my alert over here. When it breaks that little bit of structure underneath here, add alert. I'm showing you how I trade and how my mind works. You get what I'm saying? Obviously, the strategy we're breaking down, but if I'm looking at this now, this is how my mind works. I'm saying that I don't care the fact that I've just been stopped out right there at the top of the range, because what do we want to do at the top of the range? It's sell area. I'm not going to be eager to turn around and be like, yeah, I want to hit the button up here. If I see this market do this, ding, and I hear my alert going off, breaking outside of my range, and then doing something like this, and then doing something like this, by all means, I might get in for the buy. Because it's basically now telling me that this angle that I've got has changed, and the market is now accelerating in that direction, especially if it hasn't hit the potential place that I think it's going to anyway. I may decide to do that. But if I did do that, I would have just pulled out 2,300 out of that trade. I'm going to get in and risk 250. Who cares if I'm wrong and it stops me out? Stop me out, no problem, cool. I'm just going to wait now. But the way I trade is I take my shots. I do take shots. I'm not going to lie to you, because if you don't take shots, you're not going to score. But you have to do it in a kind of orderly manner. Because you can get into a situation where, I just made 2,000, maybe, and then I go and risk $1,000, jump in and trade again, and I just lose, and then the devil gets on my shoulder, and I take another trade again, and I lose it again. Now I just lost you, I'm back to zero. I might as well just stay in bed. So you have to do it in a way whereby, okay, no problem, just made $2 grand. I don't mind getting back in and making another risk. But you don't want to give everything back you just made. Like, you don't want to. And you don't want to give everything back that you've made. All right. But the bottom line is when it comes to trading, you have to understand that it's about how you end the day and how you end the month. I might be up. I might turn around and say, I've, show you guys that I've just pulled that $5 grand out of the markets. But then afterwards, I might lose on my other trades at £500 a pop and lose 3 in a row. And then I only took 3.5. It doesn't really matter. It just matters that you made some money today. Do you get what I'm saying? But it's about managing that risk. So like I said to you right now, look, I want to get back in that gold, but I'd prefer, have a look now. I'll zoom out and I'm now looking for reasons to get into this trade after it's made a retracement. So I'm hoping, fingers crossed, like say for example, I'm looking at this now, based upon my range that I've drawn, maybe this market wants to retrace back into this little area here. Maybe I'm going to see this happen. And if I do see that happen and my alert rings, I'm going to be dropping my time frame and looking for an excuse to get in and then go to where I think it's going to go to. Like, I don't want to be out of this trade. I just didn't want to watch my profits of 2004 start going backwards because I get this wrong and it starts doing this. Yeah, because look, there are also other reasons. Have a look. I'm only looking on a 5-minute time frame, but I can see that there are also other reasons. I keep seeing it. It might decide to come down here. Whoops. Might decide to say, look, there's some imbalance in here that I want to go and sort out. Or there's a little imbalance in here that I want to go and sort out. Or there's I don't know. It might decide it wants to come all the way down here. I don't want to sit in there, watch my profits go all the way back down to 20 quid. That's stupid. That's just like ego. Now tell a lie. Look, sorry, this level and this level is not really on the cards. Sorry, it's a mistake. Because I'm saying that it's within this trend. So within this trend, this market could come down here. Or let me look at some other time frames. Look at a 15-minute time frame. Yeah, you can still see, look, you can see a 15-minute imbalance gap still in there, which is kind of similar to where I am. Let me drop my time frame down to the 3-minute. Yeah, so right now, this is the high probability area within my trend. But remember as well, the market has the right to make a retracement and break outside that trend. Don't get twisted. This market has the right to do this. A, B, C, retrace back down to here, and then start going again. It could do that. It could do that. And it'd still be a bullish market. You'd still zoom out of this market like this on a 15-minute or 5-minute and be like, hey, this is still bullish, man. Just because it's trading within this trend now, it's allowed to make that retracement, that bigger retracement. And look, if you don't, want to back test it, just look at it. Look at it other times. This market here, you see these candles, these 3 big green candles. This was, if you was trading it, a range. Like that. If you don't believe me, you drop our time frame down, you'll see it. Yeah. This was a range. The market was trading within this range here. And you think to yourself, oh, it's going like a missile. You can't go wrong. If I drop to my 1 minute, it'd be a bit clearer. And guys, like I said, I'm in the 1 minute because time frames don't matter. It just doesn't make sense me turning around and saying to you guys as a newbie that you should be on these smaller time frames. This is why I steer away from. Before I was talking to you guys about these smaller time frame stuff in normal sessions. This ain't a normal session, this is a conversation. And I was like, yeah, but it's too fast for people that are learning. I'm a nerd and I'm glued to my screen and I've got alerts ringing. Like my kids, like the alerts of the MT5 are the background music to my life at the moment. You know what I'm saying? I'll be downstairs eating and I'll hear ding in my office, ding. And I'll be like, 1 second. And I'll go and check my phone or go and see what's going on. That maybe is not the ideal way of trading, guys. That maybe is not the way in which you want to be trading, where you're a slave to the markets. But at the moment, that's where I am, and that's what happens in my house. You might just turn and say, I'm only trading between 12 and 2, and then I don't care if my alerts are ringing because my computer's off, and that's fine. That's actually a better way of trading because you don't want trading to run your life. But I'm just saying to you, look, the market was trading up within this range, and at some point, this market broke outside the range, made lower lows. Look, broke some of this minor structure. Broke some of this minor structure, came up here, made equal highs, made another lower low over here, Like the market's allowed to do that. In this instance, it just kind of went sideways and consolidated because this was Asian sessions. Yeah, because this was over in the night, this particular example. Yeah, but as easy as it done that, it could have come all the way down there. Could have. But look at that, broke structure here, boom, broke this structure here. Came all the way down into here. Why did it come down into there? Closed the imbalance, tapped in, started breaking structure. It's doing the hokey cokey. And it's doing the hokey cokey because I'm looking at it at a small time frame. If I was looking at a larger time frame, I wouldn't see the hokey cokey. You'd just be seeing the candle fluctuating up and down. And let me give you another gem. When you're in a trade and you find it hard to manage your emotions, come out of the smaller time frame and just look at it as on a bigger time frame. That's my gift to you. Come out of you having your charts sitting there on a 1 minute time frame and seeing every single micro movement moving against you, and just go to like the 5 minute. Go to the 5 minute, or go to and just so you see less. You've set your TP, you've figured your risk. You don't need to see every little micro movement, because all that energy there is just gonna send you mad. You looking at things moving and jumping around. Like you're just gonna be like, wow, you're gonna feel that anxiety and want to close your position early, etc., etc., etc. All right. So say for example, you got into a trade on a smaller time frame, whether that's 5 minutes, whether that's 3 minutes, whether that's whatever it may be, and now you're finding a lot of anxiety. Like you're thinking, oh my gosh, you've seen your target, you we want it to go to equal highs. Just come out of it being small and just go to a larger time frame, so that the candle gives you less information, because it's going to calm you down. When I'm just looking at this candle like this 5 minute candle, look, it's just kind of just moving ever so slightly, moving in the direction it needs to go. Get what I'm saying? It's just kind of, moving in the direction. We see a little retracement. We see this little move here. We just seen happen like that. On a 1 minute time frame, that looks like end of the world. That little move from up here to down here on a smaller, not end of the world, but it looks a lot more dramatic than what it is. Look, if I go to my 15-minute time frame, even less dramatic. Look, even less dramatic. I'm not even getting all those micro movements. I'm just seeing, the decent movements. Yeah, and that's a way in which you can, take control of your own mind, your own psychology when you're trading these markets. So there's all these little things, guys, these little nuances, these little things that you can do, all right, to be able to be a better trader. And it comes from, in my opinion, you have to have time in the market, man. You've got to see these things. Like I've seen so many things that I can even judge by the candle's behavior that the next push is going to be a positive push or a big push. Like, I've just seen it so much, and it's difficult to be able to just explain that out to you, like to put that into some sort of document when you see the amount. You just, especially if you're trading a particular pair, look at this. For example, here. Now, I'm concerned that this gold is going to come back at the top of this range. Okay, fine. I am concerned. However, if it now, after making that little push, clears this area up in here, we may see another little push up in here, another little push outside. Because you have to understand, even though my trend lines are like a line, on either side of a trend line is liquidity. So even if this market wants to move down, because it might want to do two things, it might want to just accelerate into this area, it's just not done, yeah, and it just goes mad. I have to do another angle, I have to change this bigger angle because of this acceleration. But even if it kind of wants to come down, this is why you hear people talk about this. If you talk about Wyckoff, or is a manipulation M pattern. So when the market comes up at the top, you see it do this, and then do this, and then do this, and then come back in, test the 786, or the golden zone, and then do this. So even now, which we kind of have done a little bit, if I was to zoom out, I'll go to my line chart, let's go to the 5 minute time frame. We are kind of making that right side of the M at the moment now. So if it decided to start doing this now, well, I'd get it. Okay. But what I'd say for argument's sake, like, if I did see a push really breaking outside of that range, that trend line, and I think it's going to do something, and I see a breaking structure, I'd be managing my risk and making sure that that's trade risk-free very quickly, because I'm still close to the top, i.e. sell territory of the range. Like, the bottom line is these lines that I've drawn on my screen are just lines. They're not like, yeah, bro, Jay, but it's touched your line here and it's still pushing. Like, yeah, because it's a line. And the way that the charts move, they're not necessarily, if this chart does this right now, spikes over here, and then does this and starts coming down here, the trend is still correct. It's still a good trend line. This range is still a good range. Look at when we've drawn previous ranges. There's been times when it's come outside the range. Like, you know, if you was drawing a range, it might be time a little spiked outside the range. Like, for example, I was imagining you was drawing this one, touching these two data points, these two here, and you drew a line coming down into here. Look. Really, this was a little bit of a jump outside of that range. This is a little bit of jump outside of that range. There. Happens. But generally, we could generally say that, you know, this market has been trading, I don't know why this is even like that, within this kind of energy, this kind of range in here. Did spike down here, but generally we're in that range. And that's the whole point about the trend lines. They're just a guide. They're a guide for your eyeballs. Any other questions? Any other questions on anything, guys? Any other question about anything? Come, let me know. Let me know. Is there anything you're finding difficult? Did I explain everything okay? I hope I have. I hope I explained it in a way where you can kind of, get some source from little things that maybe I do. Yeah, I hope so.
Yeah, you did.
Yeah. And like I said to you, it's just those incremental things every single day. You're going to say, you know what? Jay said something about 7 o'clock. So if you're in a trade at 7 o'clock and you see something just dive into a zone that you've had pointed out, well, then, get ready. Because Jay said at 7 o'clock, especially with those pairs, like some energy comes into the market. So you see it dive into your zone, then break some structure. Boy, hit your button, bro. When you see it breaking that structure, giving the indication, the correction, the continuation, hit your button. Even if that's on a smaller time frame, maybe you're going to test out on a smaller time frame. Once you've managed your risk so that trade is only going to be within your risk, going to be $100 or whatever it may be, hit the button. Because it's going to give you confidence that you've been able to identify something. And if you see it happen more than once, like it doesn't only happen once, but happens again and again and again, well, that's a play, man. That's one of the many plays that you can put in the books. You understand what I'm saying? For your trading. It's one of the many plays you can say, yeah, I've got this little play right now that I do. That's it. I've got, some other plays, some bigger plays. So if you're looking for a bigger market strategy when the market's moving decent, we already spoke about those ones. When it's really 10 out of 10 out of 10, to be able to turn and say, look, this is a great trade in line with a certain, like, for example, I'll give you an example. I'm just looking at this pair because it's open right now. Like this, for example, is gold. For example, this, we understand the liquidity play, the sweep. Yeah. So if I was looking at this and I'm like, there is liquidity below these equal lows. All right, over here. All right, there's some equal lows here. It's only a bit mad because of how far I've gone out. And I see the market come and take those equal lows over here. I'm talking about this little area here. Taps into these equal lows. I don't know. I can't just hit the button like I'm playing Snap. But if I see it grab those equal lows and then where is it? It's not this way. If I see it grab those equal lows, look, the market was consolidating once again. This is a sweep plus our consolidation play. The market was in here doing some sort of consolidation. Let's look at the time. I don't know what the time is. Yep, New York. opening around this time, and I see the market come in here, grab some liquidity, all right, below those equal lows, look, grab some liquidity, and then I see, markets open 1 o'clock, and then it break, retrace, close back above. There's definitely a closure there. This is a 15-minute candle. There's a closure there on a 5-minute or a 3-minute candle. Bruv. Mate, cuz I'm in. I'm in the trade. I'm either going below the last low, or like I said to you, I'm not going to go below a low. There's a low there just at 50%. I'm not going to go below that low here. But let's just say for argument's sake, I'm very aggressive. I'm in the trade. I'm not ramping. I've got time to ramp. You know what I mean? There's lots of these different plays. There's lots of these different little playbooks. And as you're learning, and as you've heard me talk about them time and time again, when you see liquidity, I know that everybody here who's been here for half a minute knows that if there was liquidity and you see a spike up in that liquidity, you're thinking to yourself, Jay says it's going to run in the opposite direction and they're going to go and hide the money. If your brain's thinking like that, you're going to prosper from that. You're going to prosper from seeing a breaking structure at the top of that mountain and say, you know what, I'm getting in for the sell here. This structure has broken. Or better still, knowing that it's going to run back down to a potential zone that you've got below that you wanted to get into. Because you've seen it so many times and I've drilled it into you so many times. You know when you see consolidation, that market breaks, retraces, closes back above, get in the trade. Because the reason why we do that is because this market could break, retrace, and not close back above. Not give you a correction for you to get back in. It could do this. Nam, 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 nam. In fact, nam, 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 nam. In fact, now I'm going to go up. Don't get twisted. It could do that. So if I was in this trade and I see it go nam, 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 and then come down and nam the bottom end, and I don't see it do this and close down below, I'm in for the buy from here. If I see it close above here, right at this point here, it's just done a double liquidity sweep of both sides. I'm in for the buy here. And more times out of 10, we're going to go to equal structure, some equal highs, and if I'm lucky, to the moon. So all of these things I'm giving you guys and notice is so that it kind of imprints on your brain. Oh, damn, there's consolidation there. Let me wait to see what's going to go and do. Oh, damn, I'm at the bottom of the range. This is buy territory. I'm not getting involved for anything apart from buy. Oh, damn, I'm at the top of the range. This is sell territory. Oh, damn, there's liquidity above those three kings or these double tops or whatever it may be. I know that if it grabs that liquidity, even for a short burst, it's going to run in the opposite direction. Like imbalances. I know that the market's going to come and tap into these imbalances. Imbalances are a magnet on price. Candlestick zones are a wall on price. These things that I've said to you guys have to be imprinted on your brain. And then when you actually start to see them and trade them, that's when you get that confidence. Like, damn, I saw that imbalance and the market went straight to that imbalance. Damn, you start getting more confidence now in the imbalance because you've seen it for yourself. I've drawn this trend line in. Remember, when we draw our trend lines, I only take 2 data points. It's not like I'm drawing the trend line to make it fit in with my narrative. No, I'm drawing the trend line based upon where you can see that general energy and that data. Do you understand what I'm saying? That's what I'm drawing. Obviously, it's not a great example of gold here. But I'm saying to you, like, let's have a look here. Let me see if I can even do something. Like, say, for example, I did this, which I probably wouldn't do. I tell you why I wouldn't do it, because this was the lowest low over here. So I've got to touch the data point of the highest point before the lowest low. So what I'm going to do is I'm going to ignore this spike, because the spike for me maybe turns around and says that, you know, that was some heavy manipulation, something crazy happened. All right. So let me try and find the other data point of some normal behavior, like so. Yeah. So I'm in this instance, I'm taking, and you have to be discerning sometimes like that. You have to think to yourself, is this normal? Is a COVID spike normal? It's not normal. So it's like you're taking an abnormal bit of behavior and putting it in your data. Alan, you're an analyst. If you normally get data, which is normally, you know, 2.2, 2.4, 2.6, 2.9, and then some madness happens, I don't know, flipping COVID, and there was a reading that came out as 50. What is that going to do to your data set that you've been collecting for the last 10 years?
Turn it upside down.
It's going to skew your data set. It's going to be the case that for the last 10 years, this is what's been happening, but some earthquake happened and gave you a 50. If you throw the number 50 in there, you might as well delete the last 10 years of what actually has been happening. So this is the way my mind works when sometimes I see certain things and you hear me say, I'm not going to take that level there, or I'm going to ignore COVID. You hear me say that a lot. I'm going to ignore COVID because look, there are so many pairs that you can see. Let me use one. Let's say GB. Let's use GBP. Let's use US 30. All right, let me show you, just so you don't think I'm chatting rubbish, because we are going on here, but you know I love to talk. Yeah. So look at this. This is the daily chart. Let me delete everything. I have no problem deleting everything because really I should be able to put back on my. Look at this. I don't care what anybody tells me. I'm taking these data points here, this energy watch. In my humble opinion, not that I know anything, I'm just a humble guy trying to get on this trading thing. That, we're going to go like this, is the energy of the markets. This here, I'd like to delete and rub that out. This spoiled the beautiful picture that was being drawn. And this is COVID. Outside of that, it's trying to say to me that this market really, this was the tracks. This was its route. COVID threw a spanner in the route, works, but the plan was this route. You kind of get what I'm saying. It's like I just might explain my analogy about the data being skewed. It's kind of mad now if I start saying, oh, well, I'm going to change this, look, and make the trend line like this. Because from this data point to this data point, what am I talking about? Or if I want to tell and say, I'm going to take, this level down in here and just touch COVID over here. I was like, what's the point in doing that? The market's been trading here, bro. That spike is an anomaly. You've got to use your brain and use common sense and try and be a bit discerning when you look at these markets. Yeah, like, look, right now, I'm thinking to myself that there's a very high possibility that this US 30 could get above this all-time high in January 20 to 22nd. Why? Just based upon what it's been doing since 2016. It's been trading up and up and up and up. So this was the last high. It may get to a higher high over here. It may do. And then decide we need to cool off. Do you get what I'm saying? Guys, I hope I've given you a window into my brain and into how I look at the charts and helped ever so slightly. Okay, I hope I have. Today is Fix It Fridays, where we just kind of go through and talk and understand and answer some questions, etc. And in my opinion, guys, it's priceless. Go on, Al.
Yeah, sorry, Grand Rising. Sorry to interrupt you, bro. A couple of things. Yeah, there's some serious news on today. Yeah, it's Fix It Friday, but we had the retail news. That was the spike at 7 a.m. that you had on GU. Okay. Yeah, so retail news was positive, hence the bullish spike up, and then I've come back and closed in balance, and then the expansion again. That was positive. However, the negative news for UK, they believe the UK are in recession. Jay, we've been talking about this for 18 months, right? About the recession. Recession is also going to come to United States next year. Next year, everybody, it's going to be a very volatile year because we've got about 74 general elections around the world. We've got one in the UK, which is going to probably be May. Yeah, reason why I say May, because they've given people some increases in the NI, and normally that will come out in April, but it's coming out in January. So they're preparing for a general election in May. Yeah, you heard it here. Also, we got the American election, which is going to be crazy. Obviously, you got Donald Trump with so many different court appearances at the moment, and you got Biden, and they reckon he's too old. So it's going to be a volatile year next year for the markets, and that means that we can make lots of money.
I love that. And that's definitely the case, guys. You know, in great adversity is great opportunity. And because we've been learning this skill, anyone's got me on Instagram, I put something up, which is something I saw some Japanese guys, and I think they're traders. I'm not too sure, but basically their parents are in their room. If you see my story on Instagram, you'll be able to see it. Their parents are in their room, and they're sitting in their room, you know, very humble kind of house, 2 brothers, they look like twins, and their mum and dad's in the room. And they said, like, we've just made £1 million this month, or whatever it is, $1 million whatever this month. And the parents are saying no. The guy's saying in their language, like, you know, we've been working all year to get to this point here where you say, look, we made 40 grand yesterday, we made 100 grand this time. Maybe they're even doing e-commerce, or maybe they're trading, I don't know. But they basically said, like, we've been working our whole year to get to this point here, to take this opportunity. Yeah. And that's why you got to look at the trades. It might be the case that, guys, you've been here and you've been in the tunnel for time, and next year it's just your year, man. Next year's your year. 6 inches from gold. Do you understand what I'm saying? 6 inches from gold. Yeah, but you can't take opportunities if you're not ready for an opportunity. If somebody throws the ball up to you in the 6-yard box, if you ain't been practicing your volleys, the volley's not coming off, bro. You're going to end up breaking your neck, your ankle. Yeah? But if you've been practicing your volleys all day long, and then it's the World Cup final, or your final in your local derby, and that ball comes up in that right height, you're going to put that in the back of the net because you have been practicing your volleys. You're volleying done. Do you understand what I'm saying? You just need the opportunity. And like Alan just explained, next year, there's going to be lots of opportunities. Guys, good morning. God bless. I'm going to put something on YouTube and let you guys get on with Christmas and enjoy your family. There will be no Breakfast Club tomorrow. And I will put some information back in the group when we will be back. Obviously not tomorrow. Tomorrow is Saturday. But I'll put some information when we'll be back. I'm getting busy. Guys, if you into boxing, you know there's going to be that big boxing event that's happening on the 23rd. I'm big in my boxing. It's going to be, don't miss it. It's the it's the Arab thing that they put together. They're not playing. They put that whole card together in no time. Yeah, they must have thrown all of them boxers some big money. And it's going to be good. But guys, if I don't speak to you before Christmas, I'd like you to enjoy your Christmas, have an absolutely fantastic time with your family, wind down, you know, think about be grateful for the things that you have. Yeah, you made it through another year. Ultimately, New Year's going to be around the corner. And definitely I will see you guys on the other side. All right. Love and blessings.
You too, brother, and everyone in the family. Enjoy the holidays. Blessing.
Wicked. I'll put something on in a minute as soon as I find something of value to watch. And if you are going to be here, fantastic. If not, have a great day.
Everyone.
You too. Thank you, Brenda. Thank you, sister. Big up the new family members, them. Yeah. Yeah. Love and blessings, guys.
No one grows up thinking I want to be a great non-alcoholic beer producer. Non-alcoholic beer had never really crossed my mind as any sort of thing that would be a big part of my life prior to being in the business of non-alcoholic beer itself. My lifestyle was an intense one. I've never been someone to go slow at anything I do, but it was wake up early, work out, very intense day job in the financial world, and one of the most intellectually challenging environments there is at Point 72. And then go out to work dinners, really burning the candles at both ends, and wake up and do it again the next day. It was everything about high performance in my workouts, my job, and everything I did. I grew up, as most people did, with all the jokes around the existing category, and why would you drink it, kind of the decaf coffee jokes. And it wasn't until I was living this high-performance modern life that it occurred to me. Beer and adult beverages in general have not adapted to the modern lifestyle, and there was an enormous gap here. About only 50% of adults consume alcohol on a regular basis, and the breadth of non-alcoholic options at on and off-premise places for high-performing adults was super limited. And that struck me, and once the wheels started turning, I couldn't turn it off. Because I was drinking 5 or 6 nights a week, not in huge amounts most of the time. I assumed everyone drank with regularity every time they went out to a bar, restaurant, anything. And it took me stepping away from drinking for performance lifestyle reasons to realize that not that many people actually consume a lot of alcohol with regularity. It's actually a very small percentage of the population that consumes a majority of the alcohol. So as I was in these places, bars and restaurants, and in pain looking for better options, I realized that there were a lot of people like me. And yeah, it didn't start out as I was researching a business idea, and I didn't necessarily know I was going to do this, but it became a passion that I just couldn't turn off. Before I knew it, I was working on it nights and weekends, waking up at 4 in the morning before I went to work. I found myself in a spreadsheet working on the business plan on Saturday when it wasn't even my full-time job. And that's kind of when I knew that this was something I was really passionate about for the first time in my life. I expected when I started talking about non-alcoholic beer, all my friends, family, and colleagues would think I was absolutely insane. And they were all like, yeah, if it tasted good, I would probably drink that a good amount. And like, that's when I was like, whoa, like if there were better options, I think almost everyone would drink a great non-alcoholic option with some regularity. And then I started running actual surveys and got big data behind that. The non-alcoholic beer market in 2016 and 17 was 0.3% of the overall beer market in the US. But as I ran surveys of thousands of people, 55% plus would say they would drink great non-alcoholic beer with regularity if it didn't come with the bad taste and the stigmas attached to it. But then when you talk to people in the industry, everyone would very nicely say, hey, like, be really careful how much you invest here. There's no demand for it. There's no evidence that this is going to be a thing. And I think it just wasn't a thing because there wasn't great options that got people excited. I teamed up with an incredible co-founder of Brewmaster in John, and he was by far the most talented person who'd ever turned his attention on this category before. John had won every alcoholic craft beer award under the sun, and we started brewing at super small scale on Gatorade jugs, just making tweaks, dialing in that process, and getting to real award-winning craft beer that just happened to be non-alcoholic.
The first batches were kind of fun and kind of terrifying. I had been brewing for 7 years at that time, but we really had to deconstruct brewing as it was and think about the ingredients in a much different way. And so it was the first time I had experienced those same ingredients in a different format. And so it was a great learning process for me as a brewer, so really I was starting from scratch.
It really started with the product at a super small scale, hundreds of trials. And then the same kind of grassroots attention out in the world. We went door to door, taste testing retailers, meeting people at finish lines of races when they were sweaty and having a good time, putting a non-alcoholic beer in their hand and telling them a little bit about it. I think we created thousands and thousands of super fans face to face that first summer. And then we just have kept doing that, building our community authentically, talking to people, getting people excited along the whole way.
The biggest difference between brewing traditional and non-alcoholic beer is food safety, primarily because you don't have ethanol as a preservative, and we want to create a shelf-stable product that will be good for 6 months or a year. And in order to do that without a preservative, you have to be really careful about your entire process through and through until it's a finished product in a can and pasteurized. What makes us unique and not unique at all at the same time is that we don't ever remove the alcohol. So we don't require that single unit, that single machine that strips everything out. We brew a beer that is fully fermented to under 0.5%, so we don't have to add a step. We don't have to remove anything or add anything back.
It's a really exciting time for Athletic as we take on Keurig Dr. Pepper as a new partner. They led our Series D with a recent investment. In that, we're getting a really scaled partner who operates at the biggest of the beverage industry and a great advisor in our corner. Building a manufacturing business is expensive. We've built 2 of the biggest non-alcoholic beer breweries in the world in Connecticut and California, and that investment allows us to get those facilities up and running profitably and puts us on a really good, sustainable financial future for all of our teammates. Being commercial hasn't always been cool in the beer industry, but from John's perspective, there's nothing cooler than providing great jobs, great opportunity for teammates, and that comes with financial stability, especially in this economy.
One of the biggest learnings I found in developing Athletic and our brewing process was that it wasn't alcohol I was after, it was all the ingredients. And if we can just find a way to showcase those same ingredients in a different format, people are going to like it just the same.
Humans have been drinking beer for 5,000 years. We think it's got a really important place in society. And so we wanted to give people options that fit their life anywhere, anytime, no matter what their preference is. By giving people the full social and taste experience of drinking beer without the alcohol, it just allows us to take beer where it's never gone before.
For the 45.3 million American households with a cat, the annoyance of scooping cat litter is a daily one, and pet owners are big spenders. Pet industry sales reached $124 billion in 2021, according to the American Pet Products Association. That spending, combined with the popularity of robot vacuum cleaners and the acceptance of technology in our homes, has led to a growing business for Michigan-based Whisker. Revenue reached nearly $180 million last year, a 24-fold increase from 2015's $7.5 million. And it all began in the basement of Whisker founder Brad Baxter.
I have to go back over 20 years, back to 1998. Now at this point, I had decided that I wanted to go into business for myself. I wanted to start an engineering services, product development services company, and I ended up doing that. And while I had some success with that, I realized that what I really wanted to do is I wanted to invent. I wanted to build a company around that invention, and at the time I didn't really know what that was. I was working on a few different things at the time, experimenting, exploring, but really hadn't found that aha moment that set me on the right path. A year later, after starting that business, that opportunity actually came in the form of 2 cats and an overflowing litter box. I was down in my basement cleaning up kitty litter mess because when my cats had a dirty litter box, they wouldn't actually go in the box, they would go outside of the box. And while I was doing that, I was thinking about ways that I could somehow automate the process because I was just sick and tired of having to scoop the litter box. What I was thinking about was really some kind of a rotational sifting device using gravity to our advantage instead of raking through the litter and pushing clumps. And it was, that was a fairly inefficient process. And I thought the next step really is to start to do a patent search. So I went ahead, did a patent search and found something very similar to what I was already doing. And instead of abandoning the idea or the dream of pursuing this product, I decided I would contact the inventor and see if we could work out a license agreement, which is exactly what we did. I was in California demonstrating the very first litter robot in April of 2001. The early days were actually pretty difficult. There was no funding. My parents actually refinanced their home so that they could provide $35,000, which was what the tooling cost to get this off the ground. And so my dad became a partner in the business. He owned 35% of the business at the time. And that was really my first source of funding. After that, there was no external funding. Banks were not going to touch me with a 10-foot pole because there really wasn't any collateral. So I had to find a way to make it work. And the other business that I had started in 1998, which was an engineering services business, and I kept that running for almost 20 years. And it was that business for the first 5 years of starting Automated Pet Care. That other business kept Automated Pet Care alive. I was able to funnel all my profits from the automotive business back into the pet care business. There were a lot of challenges early on because this was really a new segment of product, and although there was one other product on the market, the way I was doing it was quite different, and there were a lot of things that we learned about safety, making sure that the appliance is safe for the cat. There were a lot of learning experiences there. There was a lot of experiences and lessons learned about running a business, especially without external funding. It made it very difficult. I actually had to retool the product at about the 5th year in order to take cost out to make it more efficient so that we could actually start making a profit. Once we started making a profit, I was able to reinvest a lot of that money back into marketing, and then we started to see real growth after that.
In 2015, Jacob Zuebke came on as a consultant to help Whisker with its marketing. A serial entrepreneur, Zuebke was asked by an old friend to help the pet goods company with their digital marketing. He built such a good relationship with Baxter that he stayed on and became CEO in 2022.
In 2015, when I joined the company, I saw a really cool opportunity where the company had a phenomenal product, was about to launch a new version of the product, and maybe lacked a little bit on the marketing front. I know I can poke some fun at Brad there and he won't be offended, but if you do Wayback Machine and you take a look at our 2015 website, I think you'll see there was a lot of room for improvement. As a marketer, I saw this really cool opportunity where the reviews were just insanely cool. I remember reading one specific review of a woman who said that it saved her marriage because her then fiance did not want a cat in the home, and the only way he would tolerate it is with a litter robot. And I remember reading that at the time, not having a cat, and saying, I can tell this story and I can do something with this. And my big aha moment was at the end of 2015 as we got ready to launch the Litter Robot 3. I lined up what was at the time called social celebrities, and we had 25 social celebrities lined up. And each day in December, they would give away a litter robot. At the time, our previous record traffic was about 35,000 visits to our website in 1 month. On December 1st alone, we had 35,000 website visits. And it was an aha moment for me, and I carried that into 2016, where we ended up growing by over 80% that year, and we continued to double down and double down.
One of the things I had a misconception about was marketing. I felt that if I built the greatest product, that they would all come running for it, and I wouldn't have to really spend all that much on marketing, and that word of mouth would take over. That is not the case. Marketing is something that you have to constantly invest in, you have to constantly adjust and adapt because everything is changing in the marketplace all the time. I didn't realize this early on, but as I started investing in marketing, I realized that that is it's a very important component of what we do, and it's something that you have to constantly adapt and change and modify. And so the more money we made, the more we put into marketing, and the results of that were and the success of that are what really sold me on taking that approach.
At the end of 2017, you started to see the landscape change a little bit, and at that time we really pivoted to television. So in 2018, we shot our big first commercial called Don't Be a Scooper. And it was our way of poking fun at people that were still scooping. We almost made it a negative term to be a scooper. It was an aha moment for the company. How do we tell a story about how this litter box can truly change your life, and how the thing of the past is not the thing of the future? And it was a really cool moment for us where we really saw the direct correlation between putting out a spot that helped people see the litter box differently. And the goal of that spot when we set out to go on our creative retreat and write that spot together was, we want somebody who's previously scooped to never be able to look at the litter box the same again, and to remember this spot the next time they're elbow deep in cat deuce. And that's exactly what we came out of it with. And I think ever since then, we've tried to find creative moments of telling our story different and breaking through the noise and the clutter of what is advertising.
It's been great working with Jacob. I think the key to us working together is that we are very different. He is a very much a people person, open. I like to call him the glue within the company. He's also very adept at walking into a room, distilling the situation, and figuring out kind of what the next steps are. I think that's very important for a leader. We complement each other because I'm a lot more focused and tactical, operations, engineering focused. I really get into problem solving. I'm spending a lot of time with focused